What if I told you that you could drive a brand new Tesla? For less than your monthly coffee budget? Sounds impossible, right? Well, Graham Stephan made it happen. $78 a month for a Tesla. In this video, we're breaking down the genius financial hacks he used and how you can apply the same strategy to save big, build wealth, and maybe even drive your dream car for pennies on the dollar. This was one of the most popular Reddit posts of all time. In January 2020, Graham Stephan posted how I bought a Tesla for $78 per month. He's a personal finance YouTuber who shot to fame after being featured in Mr. Beast videos. And this post has over 2 million upvotes. Let's break down how he did it. On his YouTube channel, Graham says that he currently drives a Tesla Model 3, but he didn't get it with his own money. In fact, he got it without spending any money out of pocket whatsoever. So how did he do it? Well, it starts with a little creativity. When it comes to buying a car, there are 3 main costs: sales tax, the vehicle registration fee, and, of course, the price of the car itself. These costs total about $65,000 for a new Tesla. So Graham took these 3 expenses and turned them into monthly payments, added an additional $200 for insurance, and then he set up an automatic transfer from his checking account to his savings account every month. He called it his car fund, and by putting $225 into it each month, he had $2,700 saved up by the end of the year. Now this is where things get interesting, because instead of just saving up the full amount needed to buy the car, which would take him almost 24 years, if he continued to put $225 a month into his car fund, Graham went to a bank and used his $2,700 to apply for an auto loan. The bank agreed to lend him the rest of the money, $62,300 at an interest rate of 3%. So now he had enough money to buy the Tesla. But how did he pay for it? Every month, his automatic transfer of $225 goes into his checking account, which he uses to make his loan payment. This way, even though his total monthly payment is $963, the $225 he's already paid off lowers that number down to $78. And that's how he bought a Tesla for $78 a month. It's a genius strategy, but it doesn't come without risks. What happens if his income changes or he wants to buy something else? Let's take a look at what could go wrong. Graham uses the term paid off when talking about his $78 monthly payment. While that's true, it's important to clarify what that means. When you buy a car and then pay it off over time, like Graham did, that car is said to be paid off. But this doesn't mean that the person who lent you the money, in this case the bank, gets to keep your car. They only have a lien on it until the loan is paid back. A lien is basically a legal claim against your car that says the bank owns it until you finish paying them back. Once you do, they give you a title that proves that you're the sole owner of the vehicle. So when people say they've paid off their cars, they don't actually mean that they've made their last payment. They mean that they now own the car because they've paid back the loan. In order to do that, they have to keep making monthly payments until the loan balance reaches 0. In Graham's case, he financed the entire purchase price of the Tesla, meaning his loan was for the full $65,000. That also means that if he stopped making payments, the bank could repossess the car and sell it to recoup some of their losses. However, since he is still making payments on time, the bank doesn't have any reason to take his Tesla away from him right now. So technically, Graham has not yet paid off his Tesla, but he will eventually when the loan balance reaches 0. At that point, he'll own the car outright and be able to sell it, trade it in, or drive it around for as long as he likes. Monthly payments are typically based on how much you can afford to pay each month, how much money you have saved up for a down payment, the length of the loan, and the interest rate. For example, if you wanted to borrow $65,000 and were offered a choice between a 4-year loan with an interest rate of 4% or a 5-year loan with an interest rate of 5%, you would probably choose the first option because your monthly payment would be lower, even though you would pay more interest overall. However, this isn't always possible. If the dealer won't accept a down payment or you don't have enough savings to put one down, then your monthly payment will be higher than it would have been otherwise. Additionally, if you opt for a longer loan term, like 5 years, your monthly payment may be lower, but you'll pay more interest over the life of the loan. As for Graham, he put $2,700 down. He rolled the rest of the cost of the car, $62,300, into the loan, which gave him a monthly payment of $963. Then he lowered that amount to $78 by using his car fund to cover the remaining balance. Now let's talk about credit scores. Lenders use them to figure out how likely you are to repay your loans. The higher your score, the more likely you are to repay, and the lower the interest rate you'll get. On the other hand, the lower your score, the less likely lenders think you are to repay, and the higher the interest rate will be. So getting a good credit score is essential if you want to qualify for low interest rates. One way to build your credit is by becoming an authorized user on someone else's account. This allows you to benefit from their good credit history, which can help boost your own score. However, it's important to note that this only works if the primary cardholder makes their payments on time. If they miss payments, it will hurt both their credit score and yours. It's also worth noting that if the primary cardholder has a low credit score, it won't help you much. According to Credit Karma, becoming an authorized user is one of 6 ways to build credit. Others include secured cards, which require users to put down a security deposit in order to get approved for the card. You only need one credit card, but having multiple can help you increase your credit limit, which can improve your credit score. In general, it's best to avoid applying for too many cards at once though, because each application involves a hard inquiry on your credit report, which can lower your score by a few points. To maximize the benefits of credit cards, make sure you pay off your balance in full each month. Carrying a balance from month to month can lead to high interest charges that outweigh any rewards you earn. Getting a cosigner is another way to boost your chances of approval for a credit card or loan. A cosigner is someone who agrees to repay your debt if you can't. So lenders see them as less risky than borrowers who don't have cosigners. However, it's important to remember that cosigners are also responsible for the debt if you stop making payments. Another way to build credit is by using a credit builder loan. Unlike traditional loans, credit builder loans are designed specifically for people with limited or no credit history. With these loans, the lender reports your payment history to the credit bureaus, allowing you to build your credit over time. Another option is to use a payday alternative loan, which is a small loan with a fixed repayment schedule. These loans are typically only available to members of credit unions and often have lower interest rates than payday loans. Finally, you can become an authorized user on a rent or utility account. Some landlords and utility companies report payment history to the credit bureaus, so this can be a great way to build your credit if you're responsible with your payments. Building a good credit score takes time, so it's important to start early. By following these tips, you can establish yourself as a reliable borrower and improve your chances of being approved for low interest rates on mortgages, auto loans, and other forms of debt. So the next time you think something's too expensive, remember, it's not always about what you buy, but how you buy it. Graham didn't just get a Tesla, he hacked the system. If he can do it with $78, maybe it's time we all rethink what's really possible with smart money moves. Don't just dream, strategize. And if you're interested in learning more about personal finance, be sure to subscribe. We'll cover anything and everything related to money. See you next time.